Oh, sorry. Well, apologies. Sorry, didn't realize we were live. Good afternoon, everybody. Welcome to our audience and our panel for this session where we're going to be discussing how treasurers are managing supply chain and working capital in a post-COVID and post-Brexit environment. Firstly, many thanks to HSBC who are sponsoring this particular session. My name is Brian Shanahan. I'm the founder of Informata, a working capital consultancy and terms check, a global payments term comparison database. Now, before we get into anything, I'm going to just do some housekeeping. Firstly, there's an audience Q&A that you'll see on the right-hand side of your screen. It allows you to participate and ask questions, and we'll see those questions then as we go through. Second thing, just to be good and GDPR compliant, this session is being recorded, but good news about that means that you can watch it later or refer it to your colleagues if you want. And if you do want to get on social media, you can follow us on LinkedIn or on Twitter at ACT Update, or tweet using the hashtag ACTAC21. Yeah. Now, without any further ado, let's do some introductions. Winnie, would you like to start?
Sure. My name is Winnie Lee, and I'm a group treasurer for PPD. PPD is actually listed contract research organizations on NASDAQ. So we have about 28,000 employees and operating in more than 100 countries. So I've been working for PPD for 15 years. So been in the treasury space for some time now.
Nigel?
Hi, good morning. Nigel Shaw. I'm a Business Development Director in HSBC's Global Trade and Receivables Finance Department. Having worked for HSBC for over 30 years, previously worked in a coverage role in HSBC's Global Banking and Markets Division.
Thanks, Nigel. David?
And good afternoon, everybody. Yes, similar to Nigel, business development role in HSBC, having worked in asset finance, equipment finance, receivables finance, and more recently had a team of structurers who develop solutions for our customers related to their working capital needs.
And Tim.
Yeah, good afternoon, everyone. I guess I'm the baby of the band when it comes to HSBC. I'm only 6 years with HSBC, but clearly been around a long time. I work as a director on our liquidity team within the global liquidity and cash management business.
Thank you, everybody. Right, I'll get right stuck into these questions that I've got here. Very first one, treasurers, tend to know their businesses and their trading partners and colleagues probably better now than ever, given the last 18 months we've been through. But do you believe that COVID and Brexit have been deeper catalysts for that kind of engagement internally with internal stakeholders? And if so, has the experience been around balancing the different needs of all these different people in these times of crisis? Winnie, I'll start with you. Yeah.
Sure. In most organizations, the treasury function is a relatively small function for the organization. However, we're doing things always with collaboration from many, many different counterparts and cross-departmental, efforts. So we tend to work with many internal, teams and organizations like procurement and IT, financial system team, accounts payable, AR, legal, tax, and so on and so forth, to actually try to help the company achieve the strategic goals. Equally, we work, very, closely with many external parties. Banking institution as one, and the fintech company has been really booming. We actually been working with a lot of fintech company as well to drive a lot of actions, trying to make sure we stay ahead of the game and trying to lead the company to achieve the, strategic direction we want to achieve. Indeed, there is always a balancing act. In the, company, there are priorities, coming up, all the time. And the COVID as well as Brexit are typical, issues we all commonly battle on for some time, the past 18 and 24 months, really. So Treasury team is always the one almost like, help to prioritize all those initiatives, balancing all the, C-suite and board strategic viewpoint, and try to come to what we should actually do first and what's most important, and how we actually focus our mind to keep those targets and so on. So, for example, like during the early pandemic, because PPD is actually at the front end of the pandemic, we did a lot of COVID-related treatments and the COVID-related studies, as well as actually COVID vaccines. So many work we done, and everyone probably already know, very well known now regarding all the COVID, vaccines everyone been actually been vaccinated with. So that's actually PPD's service and the products we actually been working on. So for that, we have to stay ahead of the game when we actually first had the issues in China when they came out, and then we actually have to become PPE expert and trying to get all the PPE equipment, even quicker than the government, and to make sure our staff are protected in order for them to actually continue to do their studies and provide the services and providing the products and the study results for the humankind, really. So it's very, very critical. I never thought as a group treasurer of PPD, I need to do PPE. I need to think about what masks to buy and where to buy them, how to source them, all the logistics and custom issues and so on and so forth to get the PPE equipment in the right places for them, for our team, for our professionals to be able to do the work they require. And also, forecasting, with all the pandemic going on, how do you do the forecasting? That was really tricky. Working with lots of different departments, see what's the COVID related studies, what actually going to be, is it actually impacting our existing business or boosting our business? Is what actually going to be, what need to park, what need to be actually, having more focus, how to do the resources and how to link and how to forecast, the cash impact and also the liquidity for the organization. So all very tricky. And then Brexit itself was interesting. We had to rethink our organization in terms of bank structure and see where is actually potential impact or not, and then try out different solutions and so on. So with Brexit and COVID, I think the treasury function is become a foremind in every C-suite's director's mind in terms of knowing the fact, where the cash out, what the working capital, what the KPI is, had to become really important for the organizations across the board.
I wonder when I talk to other treasurers, certainly when you look at the first quarter of last year, Brexit was something that we all knew was going to happen, although we didn't quite know exactly what it was going to be. And COVID was totally unexpected. And certainly, a question I ask lots of people is in hindsight, how ready were you for the emergencies that were happening? Because it's many people are all over the spectrum on that particular one.
Yeah, well, I think the PPDs always react quite quickly. We're always thinking about forward thinking. So Brexit, we kind of, when I remember in ACT conference, we did a survey saying how many treasurers actually prepared for the Brexit. But at that point, we already have some strategy. We had the Brexit committee already. And also with the pandemic, we actually had the pandemic committee before WHO actually announced this pandemic, because we saw exactly the impact in China. Given we have a lot of operation in China, we saw the impact, and we starting to procure PPE since January, February time. So even earlier than some of the governments out there. So we want to make sure we're prudent. So that actually really helped PPD. Yeah.
No, thanks for that. Nigel, this is one for you maybe, yeah? Has working capital strategy changed, and should treasurers, reconsider, funding strategies which they may have dismissed in the past? And is funding the only issue?
Yeah, thanks, Brian. Last 18 months or so, we've seen treasurers look at their cash and their liquidity and, what funding have they got in place? What funding do they need for the future? A lot of that is about understanding and planning, exactly what's going to go on, but who knew the uncertainty that we would have over the past 18 months. And I think uncertainty is one of those words that's perhaps a little underused, to be honest with you. We've certainly been working with lots of clients around their working capital, understanding, what do their metrics look like from a working capital perspective, looking at that DPO, the DIO, the DSO, how long is that? Can they support themselves in a different way? What additional funding do they need, and how long is that funding going to be required for? So it's been a really interesting debate actually as well, because certain businesses were continuing to operate, others were closed. There were different sectors and different segments that had been impacted positively or negatively. We were looking at different funding solutions with clients. We had one particular client that relied on a receivables finance tool to finance itself. And then all of a sudden there were no receivables coming in. So it's sort of a stop. What do we do? How can we help you? So we actually added in a quasi asset-based lending piece to it. Actually, we looked at the inventory in the business and then supported the client with further funding through that inventory piece as well. But we're seeing more and more clients look at what I would call trade solutions as opposed to perhaps that revolving credit facility that's always been made available. Clients will typically just ask for an increase to the revolving credit facility. Perhaps you need to question that a little bit more, and we've been having more in-depth discussions with clients about actually, is an RCF the right tool for you? Should we be looking at other trade solutions to try and support your business, and perhaps work with a trade solution alongside an RCF and things like that? So we've had some really, really good debates about, the RCFs that have been put in place. The government support has been great as well. Let's not forget the government acted pretty swiftly to try and support clients. But I think now you've got a position of when that government support gets turned off, actually clients have now got to refinance and continue to service that increased indebtedness that they may have. So, we're continuing to drive different types of discussion with clients and get people to think differently, to be honest with you, about what their financing looks like.
I know from my perspective, working with clients, they go back to last March, and people were trying to work out all sorts of doomsday scenarios. Thankfully, most of those didn't actually happen. But what that has done is made people brutally aware that circumstances can change very, very quickly, and therefore it's foolish not to consider all the options that might be on the table simply because you're feeling a bit too comfortable.
Yeah, I actually think again, would a treasurer be doing their job properly if they weren't analysing perhaps a menu of options, to be honest with you, and then choose the most appropriate one? Who could foresee, from a cash flow forecasting point of view, how long you had to prepare for? Was it 3 weeks, 3 months, or longer? And we can certainly see that now, that preparation is key for a treasurer in trying to look at, supporting their business and working closely with the banks as well. That's a key thing.
Yeah, absolutely. I mean, the other thing I've experienced here, when you were mentioning about cash flow forecasting, normally we do that with historical data in mind. But when things like this, quite frankly, the historical data is irrelevant because we simply don't know what's going to happen next, and we have no real pointers to it, which changes the dynamic completely in terms of how you need to think about risk. Anyway, David, we've talked a little bit about COVID. We've effectively been through a forced transformation. I know some people have said we've gone through a change of 10 years in technology and work patterns and so on in about 18 months. But what do you see that's kind of doing to supply chains and how they're being managed, and the relationships between different people in different parts of the world, and how those things may be viewed?
Yeah, okay, well, thank you for that, Brian. So I think we have seen some change. And what we've probably seen the change is the traditional views and practices, and how there's an emphasis perhaps in some of the relationships that were typically hierarchical relationships, where a big buyer worked with a small supplier, and all of the things that brought about. And we've mentioned here two events, Brexit in the UK, and obviously the pandemic globally, but it meant that we'd seen in the UK some of the planning for change had already started. So because of Brexit and because of concerns around the uncertainty that led to, we saw businesses looking at distant suppliers and perhaps suggesting they might be less attractive partners to work with. We saw businesses planning for border delays. We saw the very real example of the Suez Canal that we're all now familiar with, but I think perhaps what wasn't really realised was at the time that vessel was cleared, the knock-on effect that it had for so many other vessels is still being felt today. And just this weekend, I read a newspaper article about shipping ports in China who have backlogs now through to November of this year due to the pandemic. So I think in essence, businesses have taken an opportunity to review their supply chains. I think that's what they've done. And it might be as simple as where are suppliers, not always known by the business. We looked at supplier data for businesses, and there were some irregularities in terms of information held about suppliers, which sort of links to technology, which maybe Tim touches on later. We learnt more about dependencies between buyer and supplier, where suppliers are strong, where there are vulnerabilities, of course. And words such as, and I think we've used it in this session, adaptability and agile, that they stop being words and they become real actions all of a sudden. And Winnie was talking about her business and agile. It actually becomes real in this situation. So I think what we saw is that traditional buyer-supplier relationship got tested. Buyer-supplier dependencies have taken more of a forefront. We saw buyers paying suppliers early. We saw that right at the start of the pandemic with their own cash. We saw an emphasis moving to liquidity and stability for suppliers, perhaps rather than some of the emphasis around lowest price and greatest efficiency. It's something that got added to the decision-making process. And in Asia, where we work very strongly as HSBC, as you know, we've seen an increase in the number of programs supporting suppliers led by buyers based on providing liquidity, and that's been the key to it. It's been liquidity for those suppliers. So I think there is potentially a new norm. I'm not sure how long norms last now, and I think I'm not sure they last for a huge amount of time. But some of the focus on cost efficiency and prices has moved a little away. Security of supply is absolutely in the fore. We've seen a rise in dependency of technology and how that can help buyers managing their supply chains. And of course, I shouldn't not mention it because it's so key, but everything contains sustainability now in terms of relationship between buyers and suppliers. So in answer to the question, Brian, I think it's become wider, the considerations than we had before Brexit and certainly before pandemic.
Yeah, I mean, my experience of the last year is that, you know, before all this, the idea of the low-cost country single source procurement model, not many people would argue with that because there was such cost savings, huge cost savings that we've all achieved as a result of this over the last 25, 30 years. But now people are questioning that from the point of view of supply chain risk. You know, where could things drop out? You know, what happens? Even many cases, you know, people didn't know who alternative suppliers might be.
Agreed.
Yeah. And you know, it's kind of learning the skills of what many procurement functions were doing 25 years ago, quite frankly. Yeah. But it kind of leads into the technology thing because, you know, it's very easy to be sitting behind a screen and going, thinking you're managing your business. And actually, I think we found out in the last year that that's not really enough if that's the way you think things should be done. Yeah. Tim, just on that technology point, yeah. You know, my experience anyway is that you know, a whole bunch of people have embraced all sorts of technologies in the last year. Not that they were invented in the last year, but they've embraced them. Yeah, and the question really is one, is that change here to stay? Do you think? And two, what's coming next in terms of, you know, that might add to that revolution?
And that's a great question, Brian. And I mean, I think to David's point, when does when does the new norm become the old norm? I mean, before I answer that in the context of business, I'd like to go back to a couple of things that Winnie picked up on. So if you think about contingencies, all of us banks from a regulatory perspective and all of our corporate friends listening today, from a prudence perspective, we had contingency plans for the worst, you know, for fires in the building, for bomb attacks, for terrorist attacks. And, you know, we all hope none of those happen. but we regularly practiced, we regularly trained, and were aware of what we needed to do for those kind of events. And I'd venture to suggest that the one thing probably we hadn't allowed for was that the kind of pandemic that we've all experienced over the 18 months. Because if you think about those traditional contingencies, they focus on an offsite. Well, none of us were going to an offsite over the last 18 months. We were all staying indoors. And in the context of technology, again, going back to something Winnie picked up on, was the way that indeed us banks and corporates started to work internally changed. It wasn't a case of you were all in the same office, you could walk down to someone's desk and talk. We were all talking to each other like we're talking today. I, for one, had never heard of Zoom at the start of last year, and now I think I'm a bit of I find myself at the age of 59 quite proficient in Zoom, so I'm proud of that anyway. So the technology with which us banks, companies interact internally has been important, from virtual working to secure virtual working as well, and making sure that there's adequate cyber protection in place for that to happen. And if I think of my day-to-day role and some of the business, some of the deals that we're transacting virtually, from homes all over the country, all over the world, over our home PCs, it's incredible to think out of one little room we're doing that kind of business. And so it's important, A, to obviously have the security in place, but B, the technology. From a wider business perspective, and particularly in the context of trade, from a liquidity perspective, I've seen perhaps the consequences of what my colleagues, Nigel and David, had seen, in as much as there was a heck of a lot of nervousness around about January, February last year. Winnie had already mentioned that they picked up on it. There's not many firms that had picked up on it that quickly. There was a huge liquidity crunch in the market where corporates were utilising any credit facilities they had to stack up and bank liquidity. They didn't particularly need it, but they just weren't sure, A, if it was going to be there tomorrow, but more to the point, what sort of situation their customers were going to be in tomorrow, and indeed what sort of situation their suppliers were going to be on. And so funding became paramount as well, and that's what we saw. Part of that, of course, was a change in the cash conversion cycle, and Nigel, David and myself had a chat about this the other week, and they were telling me, that because of this liquidity that our customers were sitting on, they were very much paying off their suppliers quickly. So it's a little bit conflicting, because you'd expect the cash conversion cycle generally to narrow. And in fact, over the last few years, it has been moving out a little bit. So what I'm building up to here is, without a doubt, there was confusion. Our customers, and it was no fault of their own, probably didn't know what was going to be happening tomorrow from a liquidity perspective, let alone, next week, next month, 3 months' time, 13 weeks. So that's where the technology came in. And I think all of us banks were in a very good position. So Brian, you're probably aware, around about 2015, 2016, suddenly digital became a huge buzzword. Suddenly all of us banks were offering digital products. And I think all of them were good products. To a certain extent, I think it was a label that was attached to something that was new and innovative and potentially using new technology. And of course, accompanying that was the rise in financial technology firms, the opening up of banking under PSD to these alternative suppliers as well. So what it meant was we were all developing our own digital portfolio of products to offer to our clients. Now, with hindsight, it's proved fortuitous. Certainly from a liquidity perspective, we have seen demand spike, and that spike you can almost trace back to the day after we went into lockdown in the UK, with treasurers primarily looking for accurate cash flow forecasting tools. And again, this goes back to something that Winnie was saying earlier on. cash flow forecasting, you know, has been around since God was a little boy. In its current form, and again, you know, we've got a cash flow forecasting tool, but as have our peers in the banking market. In its current form, it's absolutely enhanced, and that enhancement has come from technology. And a lot of that has come from the advent of fintechs. So we've seen a huge demand from our customers, accurate cash flow forecasting, but it goes beyond that. It goes to automation of the input of the data into those tools. And of course, that they don't want to be sitting in front of an Excel spreadsheet and putting numbers in and uploading it into the tool. So that then moves us on to things like APIs. And again, that wasn't because of the COVID crisis, but the interest in APIs absolutely has increased tenfold because of the crisis, because of this requirement for real-time, accurate, secure data, and for the requirement for automation as well. So something that can integrate with a client's TMS, with a client's ERP, to give them real-time reporting, to give them access to payment systems, to Swift, excuse me, unique end-to-end transaction reporting. Coupled with that, from our client's perspective, so that's very much from the banking offering in terms of technology. From our client's perspective, you know, technology has never been more important. I've always been in awe of inventory tracking. You know, some of our clients out there, particularly in the automotive department, you know, they know exactly when a part has left the warehouse and when they're short on a part. And that's just using tracking technology to track their inventory. And managing inventory is even more important now because of the liquidity and credit issues that Nigel and David both mentioned. Part of managing a cash conversion cycle is all going to be about efficient management of inventory, and to Winnie's point, perhaps a different relationship with buyers and suppliers. You know, we could have a whole session on technology, Brian. It's there. It's not going away. I think the new norm will become the old norm very quickly because of advancements in technology.
I have to agree with you, and certainly from a pure treasury perspective, yeah, what I've seen in the last 5 years as a result of various fintechs and so on, that the old problem of consolidating the data from many different affiliates around the world and all this, that's largely a problem of the past now. You know, so the idea that I know what my position is day to day, even hour to hour in some cases, you know, largely I think that problem has been solved by most people. Although there's people doing the spreadsheets, yeah. But the second part then is the forecast piece, yeah. And I think again, when we look at forecast process, yeah, that same technology has been a huge advance on that. But there's one little area, yeah, which is still problematic, yeah, with all this, and that is if people simply trying to predict how much cash am I going to collect next week, yeah. Now, not the long-term forecast, you know, kind of fits into the budgetary process and so on, but literally what's going to happen in the next 1, 2, 3 weeks. And I think if we go back to you know March of last year, just crazy stuff was happening where you know in some cases like you were saying, Nigel, you know that some of it just stopped, yeah, but that was an extreme, yeah. In more cases there was kind of wobbles all over the place and nobody knew why and how long was it going to last, yeah. And I think if there's somewhere where I see the kind of treasury related technology has to advance in the coming years, is that tiny little area, yeah, which is only a small subset of the whole forecast problem, yeah, which is now in a much better state than it was. But it does show you how do you say, these things were kind of advancing in the background, but boy, were they damned useful in a crisis. Yeah.
Absolutely, yeah. Yeah, and the AI piece, I think you mentioned earlier on, Brian, you know, the kind of adaptive learning. You're right. If so, for example, the tools that I've seen in the market, you know, you can load up as many years as you like historic data, and it will recognise recurring items and try to predict a pattern. It's like that old adage, isn't it? You know, past investment is no indication of future performance. It only takes a shock, whether that's an economic shock or one like we see now, and suddenly all that historical data becomes nonsense, and you're relying on maybe something that takes that predictive algorithm to the next stage.
which today is a person with experience. Yeah. And we haven't got beyond that yet. I had it described to me recently as that it's, if you imagine playing a game of chess, yeah, a computer can do that really well because there's a defined number of squares, defined pieces, defined moves. You can program it on as long as the computer is powerful enough. It can run every single scenario possible. Yeah, perfect AI solution. Yeah. But on the other hand, if you take, say, a receivables ledger, I might have thousands of customers with thousands of different behaviors, which is all basically irrational because it's driven by people. Yeah, it's actually a much more difficult problem. I'm sure we're going to get there. You know, when we have IBM style supercomputers that we're going to have in our laptops, problem solved. But and I'm sure we'll get there. But listen, don't want to drag on too much about forecasting. But Winnie, I'm interested in something that you alluded to, which is I frame it around the idea of customer risk or supply chain risk, which could be your customer and it could be your supplier. Yeah, and it could be, why do people drop out of the supply chain? It's not because they didn't make profits. It's because they ran out of cash somewhere. Yeah, and I wonder, how has your company's view of risk changed? Not thinking of necessarily about default, which is usually the risk way of thinking, but thinking from a supply chain perspective of what happens if some key supplier or key customer drops out.
Yeah, sure. It's a very interesting question. So one thing may be slightly different, PPD's treasury function, which I set up, 10 years ago. I see the baby grown to today. So what's slightly different is actually in PPD, the AR function, credit control function, reporting to me. So that make a treasury function customer facing, which is fantastic from PPD standpoint, work very well. So we see the cash coming in all the way, moving around different countries and the liquidity moving around to the right bank account, the right time and the right countries, and to all the way going out. So I can see all the pieces of the cash, moving around from beginning to the end in PPD. So this is very maybe different to other treasury functions. So we find that the cash forecast piece will be easier because I have visibility of the cash coming in and visibility the cash going out, and I can manage where between. So also the risk, your question regarding risk about key customers and key suppliers. So there's a different thing we did because of giving our business with service industry, so servicing, providing the service, we're doing all the related testings for big farmers. So we're doing we have different categories of customers. We actually keep on changing the profile of customers. So we have big farmers, or we have biotech, and we've got strategic, so on and so forth. So we're various different categories. We're ranking all the customers by different risk. With the risk, very interestingly, we do the traditional Dun & Bradstreet, obviously the credit, risk and so on and so forth. But we're also looking at what they are, currently doing. For example, Moderna, Novavax, they are actually very, new biotech companies and coming up during this COVID situation. And then we had to come up with, it's very difficult to, run the risk score for a company that's just starting out. Now they are very successful, everyone can see. But at the time, when we're working with them behind the scenes, no one else knows. We had to, risk score those companies to see how we can work with them, so on and so forth. And obviously now they actually become very successful. And so that's very interesting. We keep on tweaking literally on weekly, monthly basis to see where our customer risk scores are, and to make sure we emphasize on our efforts to working with these customers, because we need to make sure and this, it's become a common mission between our customers and PPD to make whatever product and service will become successful, so then we can beat this pandemic altogether. So then we really have an open dialogue with them and helping each other, and to make sure that even certain time, maybe, we have to, help in certain way, but we work together, we have an open dialogue, making sure that, whatever studies we're working on to become successful and eventually become the vaccine we need. So that's kind of an emphasis. And also there are other customers as well, which we're working through. So the different ones have a different risk scoring. We got typical traffic light system, maybe a little multiple colors than just 3. So that's what my team are working through. on the supplier side, we had different challenge because due to the pandemic, the logistics become really difficult, and then we had to sort out using the PPE as example again. So originally everything come from China or the PPE, but we had a logistic problem during the time. Certain, PPE get stopped in certain countries along the way before coming to US or go to Singapore or go to UK, so on and so forth. We had a lot of different challenges. So then we had to suddenly think about sourcing, those PPE somewhere else. And then there's not many somewhere else at that time. So we had to be very inventive and also working with certain companies in different countries, even they not used to be producing PPE, and some kind of support for them to be able to produce PPE to provide, it's a very collaborative approach we actually had. And then for those kind of a key efforts, we really actually was really open-minded, working closely with the customer, working closely with the supplier, be open-minded, because at the end we have a common goal together.
Absolutely. Nigel, one of the things I always tell my clients is it's much better to fix the roof when the sun is shining. Certainly easier. You won't get wet anyway. Yeah. But when we look at what's happened in the last 18 months, I think it's been so important for people to have their eye on this subject properly, and not just from the point of view of looking to say, trying to stop the doom from happening, but also I've seen a number of companies that are actually, as a result of the pandemic, growing at a ridiculous rate, and that's actually causing them a working capital problem. I don't know if you've encountered anybody like that.
We've seen different levels of sort of success and not necessarily true failure. But I think, when you're growing fast, you need to make sure you have the right financing tools supporting you in that sense. And a lot of that is about having a good relationship with the bank, making sure you're open and honest and telling them what you're doing and why you're doing it and how you're growing. But yeah, it's a fast-growing company is a challenge in that sense, and you want to make sure that you're controlling, the inventory that you're bringing in, then looking at obviously the receivables and then the payables on the other side. So you want to make sure you don't have a cash drain. You need to make sure you have the right facilities at the right time to support your business.
No, thanks. And question from the audience here: can you advise the benefits of RCF compared to traditional debt financing for managing working capital, especially in the current scenario?
So obviously, an RCF is it's a cash lend, isn't it? We're giving the clients a facility that is, right sized for their business and allow them to draw cash, as and when they need it to support the business, whether it's a permanent debt piece or whether it's a working capital piece. So, the benefits of an RCF, it's again, generally they're potentially might be unsecured as opposed to secured, but again, depends on the size of the corporate that we're talking about here. But it's a simple way to just borrow money, very similar to an overdraft, and yet it's going to be committed as well, isn't it? So you've got certainty of funding over a set period of time, and that's whether that's 3 years or 5 years or whatever. Again, the size of the company depends on sometimes the tenor that the banks are allowed to, or the banks want to support you with.
No, thanks, David. Next question is: are we moving from just-in-time to just-in-case supply chains?
Yeah, it's an interesting question. I think I bring out two things that Winnie said actually, which was you can't always find the supplier that you want immediately because they don't always exist. And I think if a buyer's had a traditional relationship with a supplier and that supplier is unable to supply, or there's difficulties with moving goods from one place to other, that puts an extra complexity on it. I actually think, and perhaps going as far back now as Brexit, some businesses have tried to take some stock, and that moves us a little bit away from just-in-time type supply chains. I think my overall comment on the question would be it's about certainty of supply, and again back to something Winnie said about perhaps properly understanding your supply base and your suppliers and working collaboratively with your suppliers. I think maybe just in time might be one of the sayings that's changed over the past 18 months.
Okay, and Winnie, there's a load of questions here that you can answer, yeah? But I won't pick them all. But probably most topical, for the past 18 months, what's been the most critical area that your company's focused on?
I think, for any organization, first of all, you need to think about the impact of COVID and obviously Brexit as well, making sure you have a sufficient working capital. That's really quite key. And the cash generation, how fast you're generating the cash and how much reserve or cash you need. That's quite interesting, topic throughout the whole pandemic, because just as a team reference to, I think most organization was on the same pace. Everyone tried to reserve as much as cash as possible and make sure your company as liquid as possible, and making sure your KPIs like DSO, DPO, and so on and so forth are behaving right, behavior throughout the pandemic. And then again, working with the suppliers and working with customers, make sure service the company to make sure the operation goes smoothly and focusing on the right areas to continue to generating EBITDA profits for the company, as well as the cash being liquid become, to serve the organization further to make sure the company continue to be successful or even more successful in the case of a PPD. Yeah.
And Tim, on the technology side, you mentioned things like cyber and so on. Well, I mean, we all hear buzzwords like blockchain and so, but I suppose the most recent thing that's kind of impacted my brain is, when we look at some of the ransomware attacks and so on, which, it seems like the need to deal with cyber attacks has really gone up through the roof in terms of priority, in terms of how it impacts our supply chains, as we saw with fuel in the United States just recently.
No, you're absolutely right, Brian. I mean, it's huge. Even prior to the pandemic and lockdown situation, as a bank, whenever we run a cyber awareness seminar for our customers, without a doubt, it is always oversubscribed. And I guess that the flip side of the coin here is that the very technology that is helping all of us institutions, banks and corporates alike, is also the very technology that's becoming the biggest threat in the wrong hands. I would suggest things like, so let me give you an example, things like blockchain technology, for example, fantastic for our businesses, without a doubt, and particularly from a trade perspective. The way forward, we have several blockchain trade deals or distributed ledger technology deals on our books already, but of course, if you're a nefarious type, you're going to hold a company to ransom and demand payment on the very technology that we as banks and corporates are utilizing to try and enhance our businesses. So it is key, and keeping ahead and making sure you're one step ahead is very hard. And that's why I would say to everyone listening today, don't skimp your budget on cybersecurity and make sure you stay up to date, that there's enough resource out there, cheap resource, free resource, to keep people ahead of the bad guys.
And our last question for you, Winnie, what advice would you give to help enhance resilience in supply chains, and what role do you think the Treasury Department can play?
I think the Treasury Department is actually, throughout the pandemic, and more and more emphasis on the Treasury, because the working capital side of the requirement. Main thing is, I would believe, Treasury, you can't work by yourself, by your department alone. You always need to collaborate with others. With you working together with your procurement team and the AP function, so on, and as well as a fintech company and the banking institution, and trying to organizing various different, cross-departmental meetings, external meetings, drive actions, driving further, enhancement, and also as we talk about some of the, new concept and the new APIs and the robot learning and so on and so forth. And then we actually, for example, in PBD, we actually have got a digital department, literally working with multiple different departments, and Treasury work with them together with many different, organizations together, come up with different inventable ways to making sure your supply chain is actually strong and is actually sustainable, and making sure that, you know, the operations continue flowing through, and then that actually leading to, you know, you have strong cash forecast and strong cash position for the company. So it's very important. I think Treasury is actually there to lead. If someone say what role it to play, I would say to lead. Yeah.
Okay, thank you very much, everyone, for that. Just a few closing points. Remember, you can watch this session again on demand. Don't be afraid to go to the discussion zone and share your opinions with your colleagues. There's the virtual exhibition as well. And by the way, a very deliberate plug here for HSBC, and go to their stand by all means. And they actually have a fraud app, which could be quite interesting for all this. And don't forget, please, to fill in the survey of these sessions. We're always trying to make these things better, and your feedback is actually quite important in that. So on that, I'll say thank you very much to everybody, and hopefully everyone found some useful insights from this session.
Thank you.
Thank you.
Thank you.
Thanks.